I know Mark Waller from One Thick Group is there waiting for us. Mark, good morning.
Morning, Mark. How are you?
Good. Thanks for joining us early there in Perth.
No worries. Thanks for having me on. It's only 8:30 in person, so not too bad.
Mark, I know you sent me your deck yesterday. If you want to share that presentation, I'll let you know once I can.
Excellent. Thanks, Mark, and thanks for having me back on again. One Click Group, we've been listed for about 3 years. We have a market cap of sort of hovers between 10 and $15 million, which is somewhere around 2x revenue for us. In terms of the shareholding of the business, directors own just over 20%. Half of that's me, so I'm the biggest shareholder in the company. The rest of it's mixed between our chairman and the rest of the board. Institutional holdings, just over a quarter of the business now. So we've got 5 institutions on the register, with Thorney taking a substantial position late last year. On the board, Chairman Russell Baskerville, myself as Managing Director, and Nathan Kerr and Winton Willesee. So One Click Group is a fintech where we have a platform which is called One Click Life. And the aim of that platform really is to just enable our customers to manage their financial life just straight off their mobile phone. What we're trying to build out is a really well-connected ecosystem of products on the One Click Life platform to enable people that are in that lower to middle income bracket who don't necessarily have a high level of financial literacy to be able to pick it up, manage each part of their financial life, and feel as though they're in control of their financial life by using our platform. So we've connected to the Australian government in both the ATO and the Department of Attorney General, and all of the banks through open banking and health funds and a few other platforms to bring those products to our customer base. So where we started was with tax, online tax. The reason we like tax returns is, one, it was a very familiar area for me and the rest of the guys in the business. But secondly, you gain a lot of data about a customer with little innovation in that market. A big opportunity we saw to bring a product to market, which really put the power of lodging into consumers' hands. And we then added our next day refund cash advances. And one of the reasons we brought that to market was what we were getting from our customers is their refund was very important, and the speed that they received their refund was very important. So that next day refund product is a big differentiator for us against any competition in the market. None of our competitors are able to provide a product with the next day refund in the way that we can, and as simple as we can. On the back of the success of that product, we've just recently launched the Little Money cash advances, and we'll also be launching One Click superannuation, which I'll go into in more detail soon. And I'll just mention our mortgage broking business, which we launched a couple of years ago. That's just ticks away in the background. It's been very successful for us, just slowly building a nice annuity revenue stream. At One Click Life, we own all our IP. So everything that you see on One Click Life, we've developed ourselves. That's been a significant journey. It took 3 years of working with the ATO to build the first online tax. From there, we've just continued to build and build. We now have 230,000 registered users on the platform, over $6 million revenue, and we generated our first, albeit small, but our first profit last year. A little bit of the next two slides are just highlights from last year. Last year was really a bit of a watershed year for us, recording our first profit in the business, which we were obviously very excited about internally, and really allows us now to grow without the need to go back to the market and raise money. So in terms of our registered user growth, you can see from the chart on the left there, that's been fairly rapid. We listed in 2022, and we actually listed on $1 million of revenue. So we've grown fairly significantly in that time. That importantly, that user growth is converted to revenue growth. That revenue growth is now converting to profit growth. And I'll just explain the slide on the right, that trajectory through to our EBITDA of last year. The revenue has grown, as you can see, reasonably well, and slightly accelerating over the years. What that drops down to, the orange bars that I've dropped in there, is our operating margin. And what that means is our revenue less our fixed operating expenses. And you can see from those bars, the gaps between them, the operating or the fixed expenses to run the business haven't really changed since 2022, right? So the year back before this chart. So from 2022, we generated $1 million of revenue, and that has continued. Those fixed operating costs have continued. We've had 20 staff, 20 full-time staff between when we listed and currently, and we're now generating $6 million revenue versus just over one when we listed. Then less our marketing. Now, our marketing is all about new users, right? So there's a huge opportunity for us to increase the scale of the number of users on our platform. And for us, what we've always been trying to achieve is we have our tax product. People come to us for our tax product, and then they engage with our other products on the platform. And as we're bringing online these new products now, we expect to see that translate into accelerated revenue growth and accelerated profit growth as well. A few highlights in the last 6 months. These are all announcements that we've made on ASX last half. So the first one there is our July revenue of $3 million, translating to an EBITDA of $1.4 million in that month. And the reason I show that is twofold. One, just to demonstrate that at the moment, whilst tax is our predominant source of revenue, in that most of our revenue is generated from the period between June and November, so that 6-month block of the year. The second reason is just to demonstrate how scalable the product that we've built is. What we're building out is a very, very scalable platform, a highly automated platform where people are getting instant response by the use of AI and chatbots to be able to talk to a customer, pull out their details specific to them and present those in a format that makes sense to them. And as I said earlier, right, we're dealing with that lower to middle income demographic with reasonably low financial literacy. What we're seeing is every month in the following year, every month now is just stacking higher and higher and higher with our costs staying the same. In 2025, we exceeded our 2024 full year revenue in only 8 months. We did the same the year prior and the same the year prior. So we've had a pretty steady, nice growth path with that tax revenue, where we're exceeding our prior year revenue in only 8 months, which is great. Our revenue for the year was over $6 million. We generated $0.7 million of positive cash flow in the second half of last year, and we expect that to be significantly more this year. And importantly, our user acquisition costs are starting to drop. 2023, 2024, we were basically paying for every single customer that came onto the platform. 2025, now that has shifted to a significant number of customers coming to us organically. Generated over 60,000 new users added to the platform in 2025, which gave us over 230,000 users at the end of 2025. Very importantly, we also introduced another significant new product last year, which was our Little Money Cash Advance product. What we're doing is taking connections from the ATO, Department of Attorneys General, and our health platforms and banking platforms, and representing all of that into a tax return that generates a significant amount of data for us. And look, from our side, that data is then very important in how we present additional financial products to our customers and how easy it is for them to be able to transact with us on other financial products. So that data is really key to us and super important. From a customer journey perspective, what they see, so when we're looking at a new user signing up, they register, verify their identity, and we've got very sophisticated ID systems. Instantly, their tax return is completed to the point of knowing exactly what their refund is prior to putting their deductions in. They then have the option of manually adding in their deductions, or alternatively connecting their bank to the product, which will go through using our AI search for deductions and allow them to add receipts, and then hitting lodge. And it really is as simple as that. The whole process takes between 5 and 10 minutes. At the end of your tax return, you then have the option of lodging and waiting a couple of weeks for the tax refund to come from the ATO, or alternatively, you can request that tax refund the next day. From an existing customer's perspective, obviously they've already ID'd, they're logging in, their tax return's sitting there ready for them to go. And if they've been updating their receipts during the year using our receipt tracker technology, connected through their open banking, they will have a tax return sitting there ready to go, and just all they have to do is log in and hit lodge. So a really simple way to do your tax return. They have then the option of waiting a couple of weeks or requesting a next day refund. That next day refund product we've had up and running for 3 years now. We've advanced over $10 million worth of refunds to customers. It's been hugely successful. And what we've had is a lot of customers then request a cash advance later in the year. So we had enough and quite an overwhelming demand from our user base to provide a product to our customers that they were able to use on an all year round basis, not just at the time of lodging their tax returns. So a couple of years of development later, we were able to build out what we've called our Little Money Cash Advance. What that's providing is cash at any time during the year that a customer needs it, as and when they have an expense that comes up that they're not expecting. That's repayable in 28 days through 4 weekly payments or 2 fortnightly payments. That will depend on their wage cycle. So the repayment structure is tagged to when their wages are received. Our charge is a 5% establishment fee. There's no other charges thereafter, no interest or anything like that. The way that works from our perspective is a customer connects up their bank. We provide a financial life health assessment, then assess their credit, and What we do then is provide, or in the case of someone that's got poor credit, reject the application, and a customer just repays that as and when. This product is providing is see a second revenue source for us, providing, a customer lodges a tax return, costs $99 for them to lodge a tax return. If they use this product 4 times during the year, we've just doubled our revenue from that customer without another dollar of marketing expense. We have 230,000 users on the platform as at the end of our last calendar year, 31 December 25. For us, the aim for this product is as quickly as possible, build up to 50,000 users using the product on a regular basis. Now, 50,000 users using the product on a regular basis generates about $10 million a year in revenue for us, so significantly changing the revenue profile of the business. And depending on the default rate, if we're somewhere between 1% and 3%, we're generating somewhere in the range of $2 to $7 million profit from the product. So quite an exciting prospect from our end. We're going fairly slowly with this product as we roll it out. We've had great feedback from our customers. We've built basically a fully automated product. However, at this stage, we've got a number of manual checks and balances in place. Once we're ready to go and we're comfortable with all those manual checks and balances that everything's working as we expect and want it to, we'll then push that into auto mode and roll it out fully, where we expect it to grow fairly quickly. Probably important to note as well, it's also demonstrating to be a good source of new customer acquisition or new user acquisition. We're seeing we rank fairly high for a lot of keywords associated with cash advance, and we're seeing a lot of new customers or new users coming to us organically through the website at the moment. Our superannuation product, it's taken about 3 years to build. Build's complete, which is really exciting. The opportunity for us with this product is our customer base is predominantly hospitality, retail workers, warehouse workers, health workers, just those top 3 occupations that I mentioned there. What we're seeing is a lot of our customers come from really transient workforces. People are based in really transient workforces. They often have multiple super funds, lost super, where they've worked somewhere for a month, haven't provided their super details. So we've built this product to allow people to check, find out where all their super is, find any lost or unclaimed super, consolidate that into a one-click life or one-click super fund, and then importantly, engage with that money on an ongoing basis. So a pretty significant opportunity for us over that 230,000 users. A number of additional products. The key 3 for us really is our online tax, that little money cash advance product, and when our super goes live this half, our superannuation product. Just on our user growth, where we're seeing that user growth come from is, as I mentioned in prior years, we had a significant amount of our growth coming from paid sources. We now have a really good mix and balance between organic growth, so call it free customer or user acquisition, versus paid growth, which is obviously exactly where you want to be. But what we saw quarter of last year is our organic growth was larger than our paid growth, and we've seen that flow into this year as well. So we're seeing some really good economics around the cost of acquiring a new user and our ability to grow beyond that 60,000 users that we were able to grow last year. Happy to take some questions.
Mark, we might start where you finished there, just on the super product, given its impending launch. I do see it floating around LinkedIn in a few places every now and again, but just in terms of unclaimed super at like maybe an industry level, or maybe if you've got it as a cohort of people, when you've been doing some of the back testing of
Yeah.
looking at some of your users and the amount of multiple accounts that people
Yep.
have, maybe just give a sense of the opportunity for the consolidation of whether that's based on industry numbers or in your cohort of customer numbers.
Yeah, no, great question, great point that you raised there. So the lost and unclaimed super in this country is well into the billions of dollars. Based on what we see from our user base and the sampling that we've done across the user base, over 3/4 of our customers have multiple super funds, which is just a huge number, right? Completely blows me away. And nearly 20% of them have lost or unclaimed super. Now, that varies from anywhere from a few dollars through to tens of thousands of dollars. But there's a huge opportunity to assist our customers in, one, consolidating, so moving out of that high cost environment with multiple super funds, multiple insurances, so on and so forth, to a really low cost, easy to manage one-click super fund. And the ability then to help our clients find that unclaimed super, which is sitting with the ATO, and pull that into the fund as well. And the process that we've built for that is, well, the name of our platform is One Click Life. So we've tried to get as close to one click as possible. Superannuation's a little bit more complicated from a legislative environment, but it's a few clicks through the screens to pull all that information in and then consolidate that into a one-click super fund.
And I know you mentioned there it's 80 basis points, which is, pretty competitive. And insurance within in the product, is that
Yeah,
part of it as well?
absolutely.
And is that is that an additional revenue stream, or is that kind of captured in that like kind of 80 basis points is?
Currently captured in the 80 basis points, which is a default super. It's probably important to note we're not a super fund administrator. We've white labeled someone else's super fund and we're promoting that super fund. It's all built with one-click super investment, so we are one-click conservative through one-click high growth. But very important to note that it is very much a very low-cost product from our perspective, and we're just taking a share of the administration.
Squeeze in one more question. The 230,000, I know you said they're primarily that kind of transient, maybe more blue collar workforce. In terms of spread across the country, is it like
Yeah,
representative right across Australia? I know WA based company and people from WA are quite patriotic, love to support a local WA based. But is that
so
230? I'm thinking about from both can come from if you're kind of under index for New South Wales, for example, or Queensland because
yeah.
you are kind of based in WA. Maybe just give us a sense of it. Is it like right across the board the 230?
Yeah, so in terms of that user demographics, it interestingly just follows the population around the country. So
Okay.
WA, we're bang on index. We're actually overweight in Queensland, New South Wales, underweight in Victoria. So if there's any Victorians on the line, please, let your let the fellow Victorians know about us. But that's the only place we're underweight. Outside of that, it's pretty steady around the country following the population map. Yeah.
We'll squeeze in one more very quick one. Any indications so far of the cross-selling, I guess you can say, or how many of the users have kind of got some of
Mm.
these multiple products going? I know Super hasn't started, but who
Yeah.
have done the tax return, taken up maybe a small cash advance, and
Yep.
have done an inquiry on health insurance, and maybe not taken it up, but at least engaged with the offering.
Yeah, sure. So of our straight up tax returns that we lodge at any year, between 10 and 15% of those tax returns will use a next day refund feature. That was 12% last year. Of the people that have lodged a tax return with us, then converting into little money applications, that's been very, very healthy. So that's up to now 4% of our user base that have tried our little money product. That's without any marketing, right? So at this stage, we're just rolling that out very, very slowly. It's been very high demand for that product, so we don't want to push it out too wide too quickly. And then in terms of our wills and health insurance, I mean, every day we'll have applications or new will being done. We're actually going to transition our wills. Wills are very, very much a one-off product, right? It's $49 online will. We're actually going to transition that away from being paid to a free product with a focus on customer retention. We only generate about $5,000 a year of revenue from that product, so we want to invest that back into our customer base.
Exactly.
Yeah.
You don't want to grow the little money product too much and give your balance sheet a heart attack. So yeah, the
As an
steady
ex-CFO,
as she
Mark.
goes.
Yeah.
Mark, we will leave it there, and yeah, let's touch base maybe after the 4C, maybe in July after the June 4C, once you've kind of got over the first month of tax reporting season.
Yeah, sounds great. Thanks.
Right.
Thanks again, Mark. Thanks for having me on.